Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's been a very narrow band of range throughout the course of the day, although on a subdued note is how we have been trading at for the large part of the session. 22,472. We're definitely off the lowest point of the day, but things have been rather choppy and we still remain below the flat line as well. Remains to be seen whether things improve in just the last half an hour to see a positive closing after a day's negative closed yesterday. Now, of course, remains to be also seen how things will shape up because markets will also be eyeing after the market hours announcements on the IIP data and the CPI data. The macro numbers will also indicate the way forward for the markets going forward. And of course, the global markets continue to be important to watch. Back home in India, it's the IT space that has been dragging the street sentiments. Almost a 3% cut for this one. Realty, PSU banks, metal stories, even the broader markets are slipping into the red. But it's the banks that have taken on the mantle today to really run the show, especially private banks which are up by 0.7%, largely led by HDFC Bank since morning. This is despite IndusInd Bank first initially starting off the day on a lower note, then recovering about 3 to 4% after massive cuts yesterday. Autos, financial services, pharma, oil and gas and consumer durables and even slight gains on FMCG can be seen among sectors. Now, when we look at the top movers on the Nifty, IndusInd Bank, that was sharply lower by 27% as of yesterday's trade, today is recovering a tad bit, about 4% higher. Top mover on the Nifty, followed by Tata Motors, that continues its strong move. You have Kotak Mahindra Bank, Bajaj Finance and HDFC Bank as the top 5 contributors on the Nifty and the top 5 movers as well. Now, when we look at the top drags at this point on the Nifty, well, we'll find a lot of names within the IT pack again. Infosys is down by over 4%, Wipro, Tech Mahindra, Tata Consultancy Services and HCL Tech. So it's the IT pack which is emerging as the weak link in trade. Let's welcome our guest on board to really understand the market sentiment and the tenor going forward from here. Mr. Sharad Awasthi, the head of research at Smiths, is now with us. Warm welcome to you, Mr. Awasthi, and thank you so much for joining in. I want to first begin by understanding from you, what is the sense that you get from the current market trading setup? We saw the US markets also now coming under pressure of the tariff talk in the US, and that's why there is some talk about US recessionary concerns again emerging after some 1 or 2 years. How big a concern could that be for emerging markets like India?
Yeah, thank you for having me on the show. I think, yeah, sentiment-wise for equity markets, it's a pretty big blow. But if you look at US, I think largely it's something that's already stagnating at somewhere around 1%. The sheer size of it is important. I think, again, technical recessions are not that much of a problem. But if this kind of tariff issue continues longer, I think this conservatism could lead to a global dampener for
Hmm.
global trade. That is something that is certainly negative. But again, I'm of the view that most tariffs usually find a way around, and I don't think it will be more than lip service. So they might come up. You might have a 3 to 4 month kind of period where the logistics are rearranged. But beyond that, yeah, for the US, for temporary period of time, if inflation does go up for most of the production, basic production, base metals, etc., I think that could create a bit of ruckus there. And we have already seen a softening of that stand because now they're realizing that there could be counter tariffs also. It's not a standalone game. So I think conservatism at the global point is not good for the global economies. For everyone, it is going to have be counterproductive. The faster the larger companies, the larger countries realize this, the better. So I think, yeah, could be some short-term pain for the US particularly. But how much will it dampen global growth? I think when you're just growing at 1.5% at most, I don't think you have a major weightage. So I think the growth was primarily coming from countries like China and India. I think India will continue to grow. Next quarter onwards, we will see much more
Yeah.
improvement. So I think that should counterbalance it. And I don't think this tariff thing is going to get prolonged. And even if it does get prolonged in some spaces, I think largely you can expect that, over the next 2, 3 months, logistics and trade rebalances to different routes and largely have very negligible impact on the actual economy.
Fair point. Now, when we look at, okay, maybe the absolute near term could be still volatile, but over the last few odd trading sessions, we are also seeing the Indian market show some kind of a resilience, wanting to come back and probably trying to find a bottom in place. Do you think the worst of the fall is already behind us when it comes, even if there has to be some more volatility, we are largely there when it comes to forming a base and the way forward may be only recovery?
Yeah, I think at these current valuations, you'd largely be looking at that. You're still a country which is probably going to have the best growth rates. The valuation differential is not there anymore. I think we were trading at a premium maybe 6 months ago, but now that premium is not there. So I think valuation wise also we become very comfortable. So I don't think it's a problem now. I think gradually we are in a position where the valuation discomfort is not there for the Indian markets. We still remain the most promising high growth market. Our domestic inflows continue to be strong. I think mutual fund data even today is promising. Might be a bit lower than the peak of it, but even after this 20-30% kind of correction across the board in most stocks,
Hmm.
we still have money flowing into funds. So I think that's a positive development. A bit of aberration into prices, etc., in the last 6 months that has more or less been adjusted. So the probability of falling more, I think you need talent to lose money by investing at these levels. It would be easier to make money.
Hmm. Mr. Avasti also wanted to get a sense on certain pockets in the market. I want to talk about first the IT pack. What do you think is the biggest reason why the IT stocks are underperforming, and how much more pain do you see from here on? Is this still a space that will continue to be, on the watch list as a caution because of what's happening across the globe, especially in US?
No, I don't think you should be very nervous about it. I think one thing is very clear that you're talking about reinvigorating the domestic economy. And IT is an ancillary service unit. We have a large BFSI exposure for most of the IT companies in America and Europe. Particularly, we are talking about America. So I think BFSI will remain a core feature. I think the problem that is plaguing IT right now is an understanding that maybe AI is taking away a lot of scope, but I think AI is still very nascent, over the next decade, after a decade, maybe you will have some very important aspects coming out of it. Right now, it is at a very nascent stage to expect that it will do something very revolutionary and change the landscape. Companies which were only working on labor arbitrage, for them it might be a bit challenging, because the basic functions might be taken over first. But other than that, I think companies that are managing the complex part of it, the way the IT companies across India have tried to, ramp up the consulting part of the business, which they were not doing earlier. And in the last 1.5, 2 years, what you have seen is that most of the IT spend or the spend into newer verticals is moving in tandem with what's happening globally. It's not happening with a lag of, say, 3 to 5 years. So I think that's a positive development for Indian IT. Maybe we are moving, from typically being a sweatshop to something superior, developing something better. So I think that will play out. Some companies might be victimized in this fallout, but largely on balance, I think we should continue to outperform. And once this US economy also starts improving, there is high probability that even on the manufacturing side, you will have more scope to work. The BFSI space there should also expand. So all in all, I think it should work very positive for most IT companies. And as regarding this fall, I think maybe it was an overcrowded trade. It was a no-brainer. Everyone was buying into IT. But I think now it is starting to offer you valuations where you should start nibbling into IT.
Okay, let's talk banking then, sir. Probably emerging as the clear winner in this volatile terms. I mean, at least in this week, we have seen strong momentum coming back across the board, be it financial services that started off last week, private banks this week. There were some signs even in the PSU banks as well. How are you advising clients to really move fresh funds when it comes to banking names?
Yeah, I think if you have the appetite to take risk, I've been recommending IndusInd Bank. It's corrected substantially based on the news over the last 1 or 2 days. But I still believe that it's a story that could play out very strong. I think India as a country can't do without microfinance and MSME financing. And I think the broader urban part of the business is well taken care of by the existing banks. I think that is the pocket that we need to focus on. The banks and the microfinance institutions are going through a steep and a painful learning curve. But I think this is essential for them, and I think that this should turn out to be very positive in the next cycle. And so I think I would continue to buy into IndusInd Bank, though I think it is only for people who want to take a bit of risk, because the price volatility has been a bit too much for ideal, long-term investors in a large cap stock who see 27% kind of erosion. I don't think everyone can gulp that risk, and should not also. I think so. That's a problem. But otherwise, if you are willing to take that risk, I think IndusInd is a good bet. On the safer side, I think Kotak HDFC continued to be good bets. How they transform over the next 6 months, 1 year, that could result in some improvement there also. And on the PSU bank side, I don't think valuations are any more expensive. The smaller banks, the Union banks, UCO banks, and the Indian banks of the world, I think they are attractively valued. Indian Bank has always had very good, asset quality. Post Allahabad Bank acquisition merger, basically, I think now they are again back on track. So I think Indian Bank could be something you could look at. Federal Bank is a good story, but at these valuation, maybe most of the positives are priced in. So I would rather go for the Fedfina. I think the tech one. I think that's attractively valued. It's corrected a lot. And on the insurance side, I think across the board, I think I'm very bullish on the insurance side long term. So if you're looking at a long term theme, say 4 to 5 years, I think that could play out to be a very excellent opportunity. LIC obviously remains my top bet. On the private side, HDFC Life could be a good story. And Mannapuram may be a good story on valuation comfort. So I think within the BFSI space, that is how it would sum up.
Okay, fair point. Let's also talk about one of the other spaces which have been a recent laggards, auto space, and the way Tata Motors is also coming back in the last 2, 3 or trading sessions, sir. What are you making sense of over here as well? Do you think the worst for Tata Motors fall is behind us? And what exactly would your approach be overall on the autos pack?
Yeah, certainly. I think again something where right now at these valuations you could go on a shopping spree across the board. Tata Motors was our preferred choice. Even last week I was speaking about it. Amongst the large cap stocks, we had recommended Tata Motors on the dip to buy. Fortunately, it's gone up a bit. And I think similarly, a Maruti at these valuations is not very expensive. How the electric car business plays out is to be seen. And I think even Maruti at these valuations is not very expensive. Forward growth should be very good. Even for that matter, I think a Hero MotoCorp or a Bajaj Auto might be very good bets after this correction. Regarding TVS and maybe M&M, I would not be very gung-ho about buying at these valuations. But Hero MotoCorp, Bajaj Auto, Maruti, Tata Motors, they do seem like very decent bets at these valuations. And on the auto ancillary side, I think Samvardhan Motherson does make a very good bet for targets of around 200, 220 from current prices.
Okay, fair point. Another pocket that I wanted to discuss is the oil and gas space, sir, with you. With the recent fall in the crude oil prices, are you again looking afresh on the OMCs, the opportunities that present themselves? Because we are again hearing OPEC Plus is going to be reversing the production cuts, adding on to more supplies that could continue to put a lid on the crude oil prices right now. How would you really approach this space, sir?
Yeah, I think short term sentiment wise, you can look at that. But even in the long term, I think that gradually oil prices should come down with the advent of renewable energy, development of or further improvement on the hydrogen space. I think there is a bit of pressure, on the market share side of it. So gradually, the fossil fuel demand or market share should come down, and there should be rapid growth on the renewable or new energy source kind of stuff. So that should result in very tepid demand, and gradually, oil prices should go down or remain lower for a longer period of time, barring, some short-term hiccups occasionally happening. So that's very good for OMCs. But within OMCs, IOC has been our top bet. I think even the dividend yields are robust. They are working on some alternate energy sources. Even if it trades at 10, 11 times next year's earning, I think we should be looking at 170, 180 on that stock.
Okay.
And regarding the oil exploration companies also, I think at these valuations, both oil and ONGC make decent sense. I think the dividend yields are robust. Even if they trade at 10, 11 times, you could be looking at, anywhere between 60 to 70% upside on both those stocks. So I think even those make sense at these valuations. GAIL has also corrected substantially. Reliance obviously looks very attractive at these valuations. So I think the whole space looks attractive. I mean, as I was telling you earlier, it's very difficult to find stories that are, very absurdly valued or very expensive to be, bought into with a 1.5 year kind of view. I think many stocks have become very attractive for that kind of horizon.
Okay. Sir, what's your sense on both Bharti Airtel and Reliance with this Starlink tie-up that's happening and SpaceX? Of course, we are given to understand that the, approvals will be needed from the government as to whether SpaceX can actually, sell Starlink services in India. But looking at the key prospects that within just hours after each other, after Airtel, Jio also announced the same. So, and they're going to be working in this competitive zone again together. What's the outlook here for what's going to be taking place in the high-speed internet telecom space going forward?
I think the telecom space has already played out, particularly the mobile data and caller space. I think that's voice basically. That's a matured space now. I don't think there can be a lot of new avenues coming out of it. I
Okay.
think data is the new place where most of the fighting will happen or most of the competition will happen. And both Jio and Bharti are trying to create a space there. But I think existing tariffs are much lower than what Starlink has offered in other countries.
Okay.
So let's see what pricing they come up with. Might not be very attractive to most people. I think even Tata is providing the services. What are we looking at? $8 to $10 maybe 700, 800 a month. So I don't think that the pricing at which they will come down is going to be very attractive. Maybe some niche players in the initial phase, might go in for the Starlink services. So I'm not looking at it as a very big disruption or some kind of very big mass market that will cater to. But how it transits, into some of the high-speed data requirement businesses where, a lease line or something like that kind of business, how that transforms, that is to be seen. But I don't think the mass market is going to be disrupted by the presence of Starlink.
Okay. And if one has to play, would you go with Reliance or Airtel?
No, certainly at these valuations, I would be comfortable with Reliance. I think as a sum of the part valuations, if you look at it, I think Reliance offers you decent upside. We are looking at targets of somewhere around 1600, 1700. So I think on SOTP basis, I think Reliance does make more sense. Bharti is trading at what, somewhere around 30, 35 times or even higher probably, and I don't think that offers or leaves much on the table.
Fair point. Okay. Let's also look at some of the other pockets. Then I wanted to talk about the Adani Group stocks. There has been some bounce returning back onto some of these stocks, Adani Green, Adani Ports. There are some tie-ups. There are announcements of orders. Again, the expansion plans are on its way. Anything that looks good within the Adani pack to you at the current levels and valuations, sir?
I think Adani Energy could be a good long-term bet. Adani Total Gas could be good long-term bets. But if
Okay.
you're looking at, immediate 1.5 year kind of horizon where you're looking at comfort, I think Adani Port does make the cut. I think that is probably one of the most decently valued stories within the group. And safe also. I think it's a diversified business. So I think Adani Port would continue to be the preferred choice there. And if you are someone who's going to wanting to take a bit of risk and stay long term, I think maybe Adani Total or even an Adani Energy Solution could be very good bet for that time frame.
Okay, fair point. And I also wanted to get a sense of the other asset classes. I mean, gold and silver, we have talked so much in 2024 with the outperformance coming through and the rally continuing. Of course, first 2 months were much better than March, which has turned out to be a little consolidative, for both gold and silver. What's your outlook here? And do you think stocks like gems, jewelry, maybe gold financials should again be looked at for the new year?
Typically not based on gold prices, but I think that maybe the gems and jewelry space has run up a bit too much. Though Titan has corrected and maybe the valuations offer you some scope, to start entering into it. But across the board, if I look at most of the gems and jewelry stock, I think the whole hallmarking story has been overplayed a bit, and I don't think valuations are comforting at these levels. So I think I would avoid the gems and jewelry space. Maybe nibble into Titan a bit over a period, of correction gradually accumulated, time correction or price correction, either ways. And regarding the finance companies, I think Muthoot would be fairly fully priced. But I was telling you, as I was telling you earlier, maybe Manappuram is a good bet to have on your side at these valuations. Valuations still offer some scope of improvement from current levels. And I think as a business, gold finance would continue to flourish. Many banks had also come into the business in the initial phase, but now I think the space has matured, and maybe the traditional gold finance companies will stake their claims. So Manappuram at these valuations does look much better compared to rest of the part.
Okay. Towards the end, I also wanted to discuss with you. We're approaching Holi, and any stocks that could add color to one's portfolio is something that we will ask you to provide. Those that you have come up with in your recent research. Once the markets have been falling, what should investors really add for the new fiscal year when it comes to Holi-related stocks?
Difficult to connect something to Holi, but yeah, I think Indraprasth gas is something that we are looking at, and maybe a Godrej Agrovet. What I'm looking at in Indraprasth gas is they are looking at a lot of diversification, into a lot of the trailers, etc., conversion, buses conversion. Though there has been a lot of negative vibes about what is happening with electric cars in the Delhi NCR region. But I think the alternate sources that they are developing and the way they are looking at charging points and various other businesses, that should play out very well over the next, 1.5 year. And once that happens, I think there is a high probability that, the multiples could also get substantially re-rated. So initially for targets of around, 250, 275, I think IGL could be a good bet, even if it trades at, somewhere around 18, 20 times. And similarly, on the other hand, I think Godrej Agrovet, I think the Aztec license part of the business has not been doing well. Even last quarter, they reported some 4 crore kind of losses. But going ahead, I think most of the businesses should do very well. Particularly the Aztec business should turn around very smartly. We are very bullish on the stock also. So I think that should also play out very well for Godrej Agrovet. The value addition, in the milk business through that Jersey brand is also playing out. They are planning to further expand. They have some expansion on the animal feed business also, which should start over the next 6 to 8 months. So all in all, I think growth should be robust. So trades at around 30 times. Next year, the earnings could be somewhere around $30. So you could be looking at for the Godrej Agrovet for targets of around 900. So I think these two ideas look like decent bets at current levels.
Okay, fair point. Apart from this, Mr. Vasti also wanted to get a sense on, what is your expectation as far as the new fiscal year is concerned. We are just about, 15 days away to kickstart the new, of course, fiscal year. We have started this calendar year on a very, very volatile footing. Do you think fiscal year 2026 will have something better to offer to investors than the last 5 months?
Yeah, I certainly believe that, maybe the next 9 months could be a total reversal of what we have seen in the first 3 months on a calendar year basis. And even that should transpire into much better numbers for the financial year also. So I think next fiscal should be very good. You are looking at what lower interest rates, lower inflation, better consumption, lower, logistical costs, less of geopolitical tensions, hopefully. So I think it all is looking very promising. Valuations are comforting right now. We have very little froth in the market. So all in all, I think the next 9 to 12 months should be a total contrast of what we have seen over the last 3 to 6 months.
Okay, fair point. Well, thank you so much, Mr. Avasti, for being with us on the show today and helping us understand various themes that we should keep in mind when we go into trade and invest now in the markets. Wish you a very, very happy and colorful Holi from the entire team of Business Today Television, to you, to your loved ones, to your team members as well. And thank you so much. It's always a pleasure to listen into your wise words when it comes to, the market mood, and yet you set it up with your calm voice. Thank you so much.
Thank you. Happy Holi to you as well.
Thank you so much. All right, viewers, we'll start looking at winding up the trade. We are 4 minutes away from the day's close, but albeit we are seeing actually a lower close for the day. We had started the day, above 22,500. We've given up about 40 odd points, towards the end of the session. 22,460, although we have improved quite a bit from the day's low point that came in around 1 p.m. or so. But from that time, there has been some inching on the higher side. Many sectors contributing: private banks, financial services, pharma, auto, oil and gas, consumer durables. But IT has been keeping the lid, and the index shut sharp near a 3% low in trade today, and that's dragged the sentiments clearly. You can see how Infosys has lost ground, over 4% cut. In fact, all the large cap IT names that you see, TCS, Wipro, HCL, Tech Mahindra, they've all lost ground in trade today. and that's the one that has been the true culprit. Real estate space again on a lower end in trade today after yesterday's gains, 1.5% loss. Broader markets also giving up yesterday's recovery, so 0.5% of a cut for this one. FMCG is down, infra is down in trade, even metals and PSU banks are down in trade. Top movers on the Nifty are IndusInd Bank, 4.5% higher, just marginally being able to recover what they lost. Remember, IndusInd Bank had fallen 27% by the close yesterday. Today there's a 4.5% uptick, so it's a gradual recovery. Let's see whether this continues even tomorrow. Tata Motors, Kotak Mahindra Bank, Bajaj Finance and HDFC Bank, all of them are up and about 5 or top 5 names on the higher end when it comes to the market mood. Let's also look at some of the stocks on the lower end. So Infi, like I said, 4.3% lower. Wipro, Tech Mahindra, HCL Tech, Tata Consultancy Services. 5 of the top 6 losers are from the IT pack along with Nestle. PSU stocks also just marginal downtick with NHPC outperforming. GAIL, IRCTC, Coal India, BPCL also showing us some higher sides. On the F&O pack, there was BSE that definitely outperformed today. After a long haul, finally seeing some gains come through, about 5% of an uptick that could be seen on this one, followed by Crompton Greaves that was also up by near 5% in trade as far as the F&O pack is concerned. IndusInd Bank recovering, and Adani Energy Solutions, another one that was on the higher side. Towards the end of the session, Ramco Cements, L&T Technologies, Macrotech Developers, Indus Tower, PB Fintech, about 4.5-5% lower in trade and delivery. You can see all of these stocks, they definitely dragged as far as the F&O space is concerned. Let's actually look at the broadest index, the Nifty 500 names, and you'll be able to see some strong names there. Neogen Chemical, 5.5% higher. You have Kolte Patil Developers from the real estate space, 6% up. Then you had MTNL, again the telecom bus, 3% up. Gokaldas Exports about 8.5% higher. Himmat Singha Seede 9% up in trade today. Then you also have Red Tape that was up 12%. ITDC, another one that was also up and about in trade. Many of these stocks really ticking up in an otherwise very weak setup in the market. Then when we look at Gokaldas Export, there has to be some news flow there. Sharp spike. Let's pull back Gokaldas Exports. You'll see just like one spike, and it's just happened in the last couple of minutes, or like last 1 or 2 minutes in trade. Let's actually try and find out if there is any news or which will actually come in tomorrow. So then this could be a stock that you could look at for tomorrow as well. Let me just figure out if there is any kind of news that comes in. Nothing so far that I have which I can really point out, but we'll keep an eye out on this one. But apart from this, let's also look at the Nifty next 50 names. You have again Adani stocks definitely up and about. Jio also, by the way, Jio Financial Services up by 3.8%. Adani Green and Adani Energy up in trade. Indigo was up in trade. You had United Spirits, Tata Power, Pidilite also up and about. Avenue Supermarts improving. Havells, Adani Power, Adani Total Gas again from the Adani basket definitely up and about in trade. So the entire pack looks positive as of today. Let's look at the closing points as far as the Nifty is concerned. 22,470. With remarkable recovery towards the end. You see we have actually recovered quite a bit, and that's largely to do with the Nifty Bank that definitely pulled up in trade. Banks like HDFC definitely supporting the sentiments. 202 points higher for the Nifty Bank at 48,056 on the closing basis. Let's look to see how things shape up tomorrow now, which will be the last trading session for this week before we resume into a long weekend with Holi and the weekend following through. And let's see how things shape up at 4 p.m. when we finally get to know how some of the macro data figures are coming in. CPI, or the retail inflation, and the IIP data as well. Something that will be important to track when tomorrow's market opens as well. Stay tuned with us on Business Today Television as the coverage beyond the stock markets continues on the world of business and economics.
On Monday, European shares dropped after a mixed trading session in Asia over US President Donald Trump's tariff uncertainties. Soon after, the Wall Street also responded with early sell-off. Trump's shifting trade policies fuel economic uncertainty and market volatility.